thought it would be great to start Mezz up in '01 because it combines Oaktree's expertise in debt and also, if needed, in dealing with troubled situations.
Totally agree. In many ways, mezzanine was a step out from our high yield strategy. I explained mezzanine to some of our investors saying it is effectively high yield kind of risk, but for middle market companies. So we try to embody the same kind of risk appetite and the risk control that our high yield colleagues have been employing for many years now.
Can you describe that?
Mezzanine in particular, the risk, as you know, is similar to any other company, which is anything which affects the outcome. To us, the outcome is getting a principal back and getting a prescribed return back. In middle market land, there is some unique changes to how we perceive and experience risk. One, because of the size of the companies we invest in, things often get amplified. And second, all of our investments are illiquid. So because of the illiquidity, a lot more things could happen just because of the passage of time. And thirdly, because of the nature of the business, middle market again, there are some idiosyncrasies in the business, which I'm happy to elaborate.
Yes, I'd appreciate it if you would go through some of those.
The primary sources of risk for us clearly is what can affect the companies, which is what happens to customers, what happens to suppliers, the competitive environment, the regulatory environment, the overall market environment. The other source of risk which people don't really appreciate, and it is much more prevalent in our market, is the risk of how the stakeholders in a given company perform during a negative phase. What this means is, if you're going through a tough time, will the private equity owner do things which is more suited for their benefit at the expense of the company? So the other stakeholder would be the senior lender in the company. How will they behave? Will they panic? Will they take control? And the third risk clearly is what our partners in the mezzanine do. We're often the sole mezzanine investor in a company, but we do have partners sometimes.
Now, I always think that the first line of defense against counterparty behavior is not contracts, but it's picking counterparties well.
You could not have said it better, that picking the right partner is the foremost priority for us. And then we need to be extremely selective. We turn down 80% of the transactions we see. What does that mean to us? What it means is first isolating the variety of risk factors that could affect the outcome in our company. Once you isolate what we think are the variety of risk factors, then we say we sensitize our capital structure to make sure under a variety of outcomes from each of these risk factors will the company survive. And what does a company survive mean? It means to us that it has enough liquidity. It can go through tough times in a cycle, but that doesn't mean it's in trouble. As long as it's the right liquidity, we're okay. And thirdly, what is important to us to manage risk is proactive monitoring of the company.
What does that mean, proactive monitoring?
In mezzanine land and where we make investments, we often get a board observer seat, which means to us that we can participate in board meetings with the company. So in addition to receiving monthly and quarterly financials, we get a very close look on how the company is being managed, and very often we can see signs of trouble creeping up just because we're in the board. But this is where we look at it from the company's side.
At Oaktree, we have a motto which motivates the whole company. If we avoid the losers, the winners take care of themselves. How do you think about that on a day-to-day basis with regard to the group? And in short, is avoiding the losers enough?
Avoiding the losers in our market is the only way to accomplish a successful strategy for our investors. The way we think about avoiding losers is stick to our knitting, invest in basic, stable companies, don't chase return. So one way to think about it is we look at risk return as a seesaw. One way is risk and the other say is return. And we do not believe that it's our birthright to get a high return irrespective of what the market conditions are. Therefore, when market conditions as they're today, when the return is lower, we tend to keep the risk the same and agree to a low return as opposed to going for a higher return and therefore increasing risk.
Right. I think that's very important. We don't reach for return.
We don't reach for return.